All right, ladies and gentlemen, I hope you had a wonderful weekend. We got another wild week ahead of us, and if you haven't been following along this year, it's already been a crazy start of back and forth, but now over the last 2 weeks, in terms of outflows, this has literally been one of the largest liquidations in decades. So we talked a little bit on Friday about this comparing to September of 2022, and there is a lot of similarities there, but when it's all said and done, we have to talk about this uncertainty and what is going to be happening this week. We have a lot of events from the CPI down to Fed speakers and even more tariffs. Even on Friday, we ended up going even lower and we bounced, and people feel a certain way, but when it's all said and done, the size of the candles, the volatility, it is all very apparent. It's feeding into bonds and rate cut odds, the dollar, and all of that. And even last week with Europe, man, we have so much to go over. So I got the plays, the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 20 less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, I want to go over the first key, and then I want to show you with some pretty pictures. But this week is very straightforward. We have the CPI on Wednesday, the PPI right after, and then the consumer sentiment on Friday. You're going to get a lot of other political events sprinkled in, but like I'm telling you here, we are still in the middle of this volatility. Even though 1-2 days may feel good, you have still been going lower. You have given up all of the election gains, and now what's happened in the bond market and everywhere else, there's some things that we got to pay attention to. And don't forget, even from last week, the general uncertainty related to inflation, politics, all of that, it is actually one of the highest it has ever been on record. So that being said, don't forget, this is what I showed you guys last week. This is what I'm talking about in terms of uncertainty, and then even comparing it to the VIX. So we saw a lot of that move last week, but the other stuff I want you to see, and this is from Michael Wilson or Michael Hartnett of Bank of America, and it's going over just a lot of interesting factors, and he's talking about everything from bonds and Europe and all of that, but people on Wall Street are noticing now, not only is the S&P and the NASDAQ at these 200-day moving averages, but also the S&P relative to the value of TLT, the stock market relative to bond market, that is testing an interesting level from here. So just to keep it simple, if you have stocks go lower and bonds go higher, that's going to throw out of whack the relationship you've kind of seen for the last 2.5, 3.5 years, and that can change a lot of the dynamic here in the market. So that's a big one that you got to keep in mind last week, and this is, again, related now. There's going to be a lot of eyes on bonds this week because what is happening with our yields, the recession, inflation, uncertainty, all of that, and now everything we saw out of Europe, not only them cutting rates, but what happened with Germany and that funding. Now the call for the rest of the year, people are expecting that European bonds will now do better than United States bonds, or reverse that around, aka the yields will go higher, so technically they'll do bad. But sorry to be confusing, but there's that part. And then India and small caps, this was brought up as one of the strategies to look at a lot of the overseas markets. If we start to watch our dollar go down, and if we do watch this dynamic that we've already seen at the beginning of the year with the underperformance out of America, he's saying that a lot of people have front ran Europe already, but there is a huge bear market in small caps in India. So we'll talk about that tomorrow and see. But other than that, I'm sure you've seen gold last week. You literally, or even last month, was the largest 4-week inflow on gold on record ever. So nobody has ever bought in this much gold in a 4-week period, or at least that's what we have just witnessed. And then in the same time, we also saw the crypto stuff on Friday. It was kind of a dud. People wanted the stockpile. They kind of just got really, or they got a stockpile, not really a reserve of buying, but crypto saw the largest 4-week outflows on record. Again, it's more of a newer one in terms of tracking that with the market. And then European equities, this is now, not only have we seen them outperform that German stimulus stuff, this was a big deal last week. Every single day we were dealing with whatever we were going through, and then the German bonds were popping and blowing out from the middle of the week. So they actually saw the largest 4 weeks of inflow in the European equities in the last 10 years. And then now this is a chart in terms, this is one we're going to talk about on the plays, but you've seen this already. It's literally discretionaries versus staples, and that's why lately you have been watching staples go up while other names sell off. And this chart is tracking it pretty much from 1999, and this is a very bad sign when staples or discretionaries underperform staples. Every other time we've kind of seen a peak, a shift, some sort of rotation, and that's really what we've been doing from the beginning of the year. You noticed it in your long term. Even on Friday, we got a lot of plays there, but simply discretionaries are selling off. The staples are either holding up or getting a bid, and now that is changing these ratios. That's why the 200-day, everything in the market from now, just the 200-day, but now bonds and the bond value compared to the market, staples versus discretionaries, even now U.S. versus foreign yields and all that, it's all starting to get to this critical point. So that's why all this is important. And then we keep talking about Europe, and this is something I really want you to see. This is the German government budget balance, the percentage of GDP that they're spending in terms of like deficits, not only for defense. So you can see Germany hasn't spent money for a very long time. They do not do this, let's raise money and issue debt. Ever since this period, the culture has not been a fan of that. So we'll see if that changes, but that could be a huge fundamental shift for global markets if we start watching a ton of money and, fiscal stimulus out of Europe that we haven't seen in a very, very long time, longer than I've been alive. I don't know if I should tell you that. You're going to be like, he's young, yeah. But yeah, those are all the pretty pictures, but I hope you get what I'm saying here. There is still a lot of uncertainty. There's a lot of things going on, so we're going to juggle a lot of trade policy this week with other things. CPI, PPI, consumer sentiment are going to be your main events, but now all this other stuff we're dealing with is still going to be adding to the volatility, the size of the candles, and all that good stuff. So I hope you're ready for that. That is key number one. And then key number two, steel tariffs. So I think people have also forgot about this one as well, too, and I have another pretty picture. I put this up on the watch list, so I'm leaving it here too. You guys should save it. And also, make sure you guys are on stock market, because last week I did a lot of live streams in replacing for the watch list just because the schedule and everything else. So if you don't see me post on here for a watch list, it might be on that channel. So keep that in mind. But we did cover this chart before, and I want you to save this so you know we're dealing with all of these tariff events. We're going to get a lot more in April, but now this week, same day as the CPI, all major exporters of steel and aluminum, they're going to get hit. That does include Canada and Mexico too, so we're going to probably watch the same back and forth that we saw last week, where people freak out Tuesday, Wednesday, and then you're going to hear people talking about it, the news all day, inflation is bad for growth, and then there's going to be some headline about, oh, well, we'll work out a deal, this carve out, this, that, and then the market will be sensitive and react to that, and there you go. That's why the candles are so big. So we'll see how that plays out, but that's going to be on Wednesday, March 12th. Again, CPI will be very important, and now to tie all of this together, here's my main theory, and I really think you guys should take a look at this, because even like last week, last couple weeks, all month, really all year for bonds, they've came up a lot. Even they chilled out last week, but like, don't make any mistake. Right now, the bonds are like the real number one answer, and it's not really just like bonds and TLT, but you have to realize rate cut odds are really moving. Tariffs, uncertainty, inflation, all of this stuff is very important, and that is what's tying into everything. But when it's all said and done, whatever has happened in the last couple of weeks, you see the movement, you see the liquidation. We could go over all these things, but the rate cut odds, after being very stubborn and listening to the Fed and the election and all that, they got very depressed. Again, just a couple of weeks ago, I put it on one of these watch lists. We were only pricing in one rate cut for the end of the year. Now, depending on the size of the candle, you're anywhere from 3 rate cuts to maybe we'll see 4 or 5, and where we go from there. So we're going to talk about what I expect in the market and the thing you really should be looking for. But when it's all said and done, don't lose sight of the whole rate cut odds. And if you really want to ask yourself, why is the market doing this? Why is it up? I thought it would be this. I thought it would be that. I think the rate cut odds might be able to give you that answer there. So we'll see as we move forward, and even CPI now, how is that going to affect rate cut odds and everything else in between? I think we are going to get a lot of answers from there. Otherwise, it's going to be an exciting week. We're going to get, again, a lot of different random political events sprinkled on, and then we'll have our data. So, Chad, I hope you're ready, but let us get into the plays. So, right off the bat, I got a couple of different plays, and I guess I'm going to talk some play theory, and this is kind of the main theme here moving forward. And this is what I'm saying. We're going through this volatility. You're going through this uncertainty. Let me just keep it real for you. I mean, look at this sell-off here, and you see how things are moving, but like, all we care about is if we go down and crash. Yes or no? Because when it's all said and done, if you bounce up, that'll buy a week. You're going to do the dance. If you end up rocketing up and skyrocketing, I mean, that's just the situation you've been in. That's why I say that, because going up, melting up, not going down, not changing the narrative. I mean, we haven't seen that one in a while. So when it's all said and done, all that really matters over the next few weeks, the data, until we start getting more policy action, we see what materializes. All that matters is, are you going to get enough to bring you down? Are we actually going to get a situation that now we've broken one range, now you're at the 200-day moving average, do we bounce off of it and get the rally of a lifetime again? Or, again, does something change, and now these next few weeks, does that situation deteriorate, whatever it is, rates, rate cut odds, the data, Powell, external, who knows? But that's all we got to see for, because then if we start breaking into the lower ranges, something new develops, then that's going to kind of be your shift for probably the first half of the year, maybe all year. We'll see. Otherwise, anything to the contrary is just kind of back to normal. I know that may sound weird, so watch out for that. Other than that, though, if we do get this like sell-off here, and this is why I brought up September last time. Brought this up on Friday for the watch list, or Thursday, and I think this is going to save you a lot of money. I don't even have the screenshot on this computer. I have it on my other one, but essentially the sell-off we saw in September of 2022, that correlates with a lot of the other records and how we've moved so far. It was weird because the market sold off a lot, but it wasn't your buy crash protection. The skew index went down, and this is why I was telling people on Friday, if we see a September sell-off play out the money puts aren't going to make you money. You have to go near the money, because we may not be getting this big crash sell-off. It could kind of just be people over weeks and months selling off, getting all of these outflows, and then, yeah, we end up a lot lower, but this doesn't mean it's going to cash out certain plays. And now why I'm saying that, this is what I'm tying in here to the play. Oh, that's a horn that I wrote down here. What people are going to be looking for, and some people, a lot of people aren't prepared for this, is down stocks, down yields, and then skew going down. So essentially what happens now if the market comes down, but so do bond yields, aka you'll watch the market come down, TLT go up, and that used to be normal back in the day, but I don't think people are ready for that, because the last couple of years you've been having down yields. Eventually the market would go up with it. But if we start seeing bonds, people go to bonds, staples kind of hold up, stocks slowly sell off over a couple of weeks here, and it's not like an aggressive sell-off, that's going to change how you're going to have to be playing these puts and intraday, or if you're trying to buy some with time, the answer is going to be in the money. But if this situation does play out, we're going to watch over the next couple of weeks. I'd be on the lookout, down stocks, down yields, and see how that plays out. But like I was saying above, all that really matters is whether or not we decline. So if we don't decline and we don't break levels, and we could get out of this volatility and the market could kind of chill out and things get better, then you just go back to Mr. Melt Up mode. So we'll see how that plays out. But again, the skew, watch the near the money plays, and now be on the lookout for a different type of sell dynamic if we get it, one that relates to 2022 where, yeah, you could sell off, but it's not going to be like some of the other sell-offs you've seen recently, and hopefully you are prepared for that. But that is play number one, and then play number two, the chips. So this could be for your long term, even in the short and midterm, but right now the chips, some of them are starting to be good or looking good, and essentially all I saw right now, Michael Wilson talked about this as well, semiconductors since May of 2023, many of them have sold off now 73% of their gains. That's when a lot of the OpenAI stuff started to go crazy. Again, it was like we were early on some of the AI stuff in 2023, but it was really after the May earnings. That's when it started to really go crazy, and now a lot of companies have came back to that. So some people have brought up AMD. You guys know I like Intel, but this could be something if we bounce off the 200-day, as long as we don't go lower, there's going to be a lot of room to either run or further die in the chips, but people are looking for a bounce there. So keep that in mind. That is play number two. And then finally, I love this one, man. Staples. So I already showed you that chart there. Again, discretionary versus staples. I think it's been obvious. I mean, your long-term shows it. Friday, every single one of these days. I'm glad I told you guys early and in real time. If you've been watching, you've been able to see me do this, and I know a lot of you have done the same now. It's simple. We start selling off. This has been a different type of sell-off. We've watched NVIDIA sell off, and then Coca-Cola will go up 2%. We have watched Microsoft, Apple sell off, and then Pepsi, Bristol Myers, McDonald's, they'll all rip. So this is what we keep seeing here, and I think very simple. If we sell off and get a down stock day, or you get, again, down stocks, down yields, and we have more of that chop, but you start to notice early on values holding off, that'll just be the little mini rotation plays that you could keep playing. If the NASDAQ sells off, I would look for value on those days, and God willing, that should keep working until we finally get the narrative shift. So that's what we did a lot of on Friday. We hit a bunch of plays, got some free. I think I got free Clorox, Kimberly-Clark, McDonald's, Pepsi, and I think there was another one, but other than that, we'll see what the news gives us. I think there's going to be a lot of bond opportunities this week. CPI, we'll see what it does like the non-farms. Again, there's been a lot of expectations and fear lately, and that's why even when we got the non-farms, it did come in stronger. It really wasn't like that big of a reaction, even though we thought it would be. Like I told you, it did seem deceptive the day before, so we'll find out how CPI plays into all of that, but I don't think we're going to get disappointed, man. Like I'm saying, either we break the levels or not. We see what happens with the bounce, the uncertainty. At bare minimum, I think you're going to get volatility, so I hope you're ready. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, forward or backwards. That's it, man. If you fail, you will see the light. If you see the light, you will be motivated by the light. Anything but uneasy. Anything but the middle. Anything trying to get you not to make a step forward. No. Forward or backwards, my brother. That's it. No one's going to judge you. Oh, yeah. So, Chad, drink that water. Stay hydrated, healthy. I'll see you in the morning. And horn.